So Bigbear.ai stock was up a whopping 45% last week. It's up 30% over the month and up 95% in the last 12 weeks. It's looking bullish right now, and it did break out on the weekly chart last week, triggering an entry next week if you're considering using weekly rules to trade this stock. So in this video, I'm going to unpack this trade and offer some thoughts on some rules you could use to trade this stock with a potential upside of 175%. Let's take a look. Now, if you enjoy my analysis of Big Bear stock today or other stocks on my channel, you may also enjoy my trading tips email newsletter. If you subscribe, I'll send you professional trading tips to help you make more profits trading stocks. Link in the description below. Check it out. So Bigbear.ai stock was up 45% last week, and a huge week with a huge green bullish bar, and price did break out above this key price level here of $4.60 or thereabouts. So if you use Dow theory and you trade on the weekly chart, this breakout last week and this close above this key line here will trigger an entry rule for next week, an entry on Monday morning at market price around about 580. If it opens at 580, obviously pre-market it might get traded up higher and you might end up getting in at $6. We just don't know. But in terms of weekly rules, there's an entry next Monday if you want to take a trade on this trending stock. And on the weekly chart, looking at the big picture over the last 3.5 years or so, Big Bear is trending up. It's looking good, it's looking bullish, and it does look as if it wants to move higher, possibly in the short term towards $6 and then pushing on towards that peak of around $10. And we can see here by looking at the price action long term, since the listing around here about $10, it did trade down, it came back up before creating the all-time high of $16 back in April 2022. Since that time, it was heavily sold off all the way down to this significant trough here around about 57 cents. Before buyers came back in, there was a big surge in buying and price was traded back up to this peak here of about 670. It then got sold off again, found support at this key level here of around $1.16 before once again creating a new peak around $4.70. Being sold off again into the significant low here of around $1.16 before more recently creating this price surge all the way up into this price peak here of around $10. And this is the most recent price peak created in February this year. Now since then it was sold off again, and it does look as if it found support here at 235. This significant price trough here has been the launch pad for Big Bear, and now it does look as if it wants to move up towards that $6 to $10 mark. You can see long term I've added a trend line here, including this significant price trough here of 57 cents December 2022, and also including the trough here of $1.20 or thereabouts, and that was created in August 2024. So that is the long-term trend. But you can see, importantly, that since this trough of around $1.16, it does look as if Big Bear is now moving upwards. It is accelerating away from that long-term trend line. And when you include this trough here, and also the most recent low from April this year, when you connect these two lows and add a trend line, you can see that the trend for Big Bear, it looks as if it's accelerating away from this longer term pattern. And as I'm sure you're aware with stocks that trend, as they create higher highs and higher lows as they trend upwards, a line of around 45 degrees is quite sustainable. So right now we've got that with Big Bear, and it does look as if it wants to move higher. So last week, Big Bear had a great week, a breakout week, a really big surge in buying activity. It smashed through this level here of $4.60 and closed last week overall at $5.80. So very bullish. So where could Big Bear head next? what are the key price levels for this trending AI stock? You can see on screen on the weekly chart, I've already marked up the all-time high, which is $16. Now underneath that, you can see that price did trade up and find resistance here in May 2022. And also it did trade up and find resistance here in February this year. This is around $10. Underneath $10, we've got this peak formed back in February 2023, and that's around $6.70. Underneath this level, we've got this price peak here created in March 2024. And also you can see that Big Bear did fall into this level after listing. There's two troughs, one in Jan 22 and also one in Feb 22. So let's mark up this level of around about $4.55. Underneath that level, we've got this key price area here of $2.35. And this corresponds to the most recent price trough for Big Bear, created in the third week of April. Under that price level, we've got another key level of around about $1.16. And that corresponds to the significant trough here formed in August 2024, where Big Bear traded down. And also it tested it a bit earlier as well in June 2024. And it also tested it again in October 2023. So there's definitely some support for Big Bear around this lower level of 118. But of course, right now it's trading much higher than that. And for reference, let's also mark up the all-time low around 57 cents. So right now on screen with these key levels on the weekly chart, we can see Big Bear closed last week at 580. It's trading now above this key level of about 460 and underneath this next key possible level of resistance of 675. So 675, or this peak back here, could be the next price target for Big Bear if the buyers can remain in control and they want to take this stock higher. Now you can see on screen on the weekly chart, Big Bear had a huge week last week. It closed high and it looks very, very bullish. But of course, inside this weekly bar, we've had 5 days of trading last week and it was quite volatile. So let's now look at the daily chart to see what happened last week. So you can see, looking in detail on the daily chart, last week's price action for Big Bear wasn't straightforward. So you can see last week on Monday, Big Bear opened at 390. It did trade down towards the low of 379 before closing high for the day. So nothing special last Monday, and that was in keeping with the recent short-term price action in this range. However, on the Tuesday, this was where Big Bear broke out. Buyers came in aggressively and price broke this price peak back here of around 460 and this key level. So it broke out on the Tuesday, but immediately the next trading day, price opened high. It opened at 580, but the sellers came back in and they pushed the price back down and it closed low. So a big reversal bar. And of course, if you'd entered on that Tuesday, and you might be a bit concerned, and potentially you might have got stopped out if you had a tight stop loss. However, the buyers came back in on Thursday and there was another reversal bar. So more buyers coming in, buying up Big Bear. And eventually on Thursday, the price closed out at 580. And of course, a lot of you are asking in the comments and wondering about Big Bear, what would Friday do? What will the buyers and sellers do on the last session of the week? And as we saw on Friday, Big Bear opened slightly higher at 590. The sellers came in, they tried to push the price lower, but they weren't able to trade the stock down lower than 555. So the sellers had to go, but the buyers were too strong. And in the end, price closed almost the same as it opened, around 583. So overall, a very bullish week for Big Bear, but you can see there was a bit of a tussle between the buyers and the sellers during last week. So based on Dow theory on the weekly chart, we do have an entry rule now we can use to enter this stock next Monday on market open. And as a reminder, Dow theory works on the premise of price, peaks and troughs. So essentially with Dow theory, what we're saying is price, since this significant trough here, did trade up to form a new peak here. It traded back down to create a second trough, a higher trough, before moving back up again to create this higher peak up here. It then came back down. Sellers tried to push the price back down but couldn't trade it below this level of 365. And then buyers came back in strongly last week, overall over the whole week, and price did trade above and close for the week above this previous price peak here. So essentially you can see with the shape of this arrow, we've got a trend emerging. We've got the creation of higher price peaks and higher price troughs. We've got higher highs and higher lows, and that signifies an uptrend. So now that we have this close for the week above this key level, we have confirmation that the buyers are in control. And if we want to take a trade on this stock, we can now enter on confirmation on market open next Monday morning. And if you were to enter next week on confirmation, looking for a trade on Big Bear, what sort of profit is available for this trending stock? So in an ideal world, the order we want to get filled is obviously on last week's close, around 580, 585. But of course, we might find that pre-market, before Monday morning, Big Bear might trade up slightly. So you might end up getting in at $6, maybe less, it might trade down. But let's assume you're going to get filled around about the close of last Friday. So we'll say 585. So based on that, your first price target could be this first price level here of around 679. So that's an upside potential of around about 17%. And you could set an initial stop loss of 10%. That would give you a risk to reward ratio of 1.5. However, I do think that stop loss of 10-11% is too tight for Big Bear. If we look at the price action for Big Bear, especially on the weekly chart, we know that this stock is quite volatile. It is a smaller cap stock, it is traded, and it's not as stable as something like a mega cap stock like Nvidia. So you have to be careful how tight you put your stop loss, because you might get stopped out, basically on the daily swings. So as an example, we can see that last week on the breakout, price swung open to the close by 50%. So that's something to consider. If we look at this bar here, we can see that this down bar was around 40%. And if we look at one more, just for context, this bar here swung down open to close at around 40%. Okay, so we know over the week, Big Bear can swing down by 40%. It can also move up by 40%. So this is something to consider. Now, we don't want to put a 40% stop loss because that's too much to give away, and that would break the core rule of risk management, where you really only want to risk per trade a maximum of 2% of your total capital. So that's important. So giving away a stop loss of 40% is way too much. I wouldn't advise that at all. In fact, 20% might be too much as well and break that 2% rule. However, there needs to be a balance here because you don't want to get stopped out when the price swings. So I think what the best thing to do is look on the daily chart and manage this on the daily chart. So now, looking on the daily chart for Big Bear, I'm thinking about how is the best way to set up this trade. We don't want to give away too much money and lose if the trade goes against us. We don't want to set our stop loss too tight, but it can't be too big that we lose too much money if the trade goes against us. There's got to be a balance of risk to reward. Now we know overall that Big Bear can move 20% in one day. It can move up 20% in one day, which is great. But also, if it goes against us, we know it can be sold off 20% in one day. So setting a stop loss of 10% would be too tight for this volatile stock. It probably needs to be around 20%. Now, depending on your risk appetite, this is where you've got to be careful. I would normally use a stop loss of 10 to 15%, but that's when you're trading something like a mega cap like Nvidia or Microsoft or Broadcom. They are much tighter, they're much more liquid, and their swings are less volatile. But when you're trading something like Big Bear, you must expect volatility. Obviously, when it moves to the upside, you want that volatility to make profit. But on the downside, the risk is you're going to have that volatility moving downwards as well. So you've got to have a stop loss to protect your capital, but you don't want it to be too tight so you get stopped out unnecessarily. So I think for this stock, it's probably best to manage it on the daily chart. And I think overall, a good place to put your stop loss if you enter around about $586 would be this marker here, this level here, $4.60. So if we put in the long position trading tool for trading view for Big Bear, we can see here that that stop from 580 would be giving up 20%. And the first target would be around 16% upside. So it's not a great risk to reward ratio for this initial price target. So as a trader, this is something you've got to think carefully about. We know the price can swing by 20%. So the stop loss is negative 20, but the reward to this first price target is only 16%. It's not an ideal risk to reward ratio on initial entry. It's only at 0.84, which for me is not enough. But looking at the bigger picture, there's a good chance that Big Bear is going to trade through this in the next few weeks and trade towards the next target of around $10.30. So then you've got a risk to reward of 3.87, which is much healthier in terms of the trade overall. Now, whether or not you take this trade based on what I've discussed today with this initial negative 20 stop loss and the small initial target, that's going to be up to you to make that decision based on your trading rules and risk appetite. I do think, overall that Big Bear could trade through this marker pretty quickly, and obviously then creating this risk to reward ratio of 3.87. But on initial entry, it is higher risk. But this is the gamble. See, this is the problem when you trade these highly volatile stocks. When you're trading these types of stocks, you've always got to have a bigger stop loss. There's more risk, but there's more reward. So something to think about. And if Big Bear does push through that $10 target, the next obvious target for the stock would be the all-time high at around $16. Then you've got a risk to reward of 8.7 and a total potential upside profit of 175%. This is definitely possible, but I think what's more realistic over the short to medium term would be the $10 target. This is looking an easier target than this level up here. But look, we just don't know. We know this stock, when it goes, it can move fast and it can take off. But there's also higher risk linked with a stock around this market cap size. So right now, Bigbear.ai stock is looking good. It's looking bullish. It is trading up. All the metrics look green and it is setting up for a possible trade entry. I do think based on the volatility of this stock, it's best managed on the daily chart, and you will need to have a stop loss of around 20% just to consider the fluctuations day to day. Will you take this trade? That's up to you. There's a lot of profit on the table potentially, but there's also a risk to the downside. So it's going to depend on your own trading strategy and rules. Let me know what you think in the comments. Do you think a 20% stop loss is too much? Would you go tighter? I'm keen to learn from you as well. Thanks for watching.